Good morning, viewers, and a warm welcome. This is 𝐲. You're watching 𝐾𝐞 TV, live from Sydney, and this is the Global Markets Roundup show, where we bring you a glimpse of the equity, currency and commodity markets across the globe. A measure of global equity markets slid from near record highs, and the dollar edged higher and bond yields fell on Thursday as investors mulled the Federal Reserve's benign inflation outlook and upbeat assessment of the US economy. The MSCI World Equity Index, which tracks shares in 50 countries, fell 0.48%. And the Nasdaq ended lower on Thursday, pulled down by Apple, Amazon and other big tech companies, as a fall in weekly jobless claims data fed investor concerns about a recent inflation spike. And the Dow Jones Industrial Average rose 54.52 points, or 0.16%. The S&P 500 lost 14.29 points, or 0.33%. And the Nasdaq Composite dropped 101.82 points, or 0.7%. And moving on to the next update, the economy-sensitive stocks saw modest gains after the Labor Department's latest data showed weekly jobless claims fell further last week, indicating a continued labour market recovery. The jobless benefit claims fell by 26,000 to a 16-month low of 360,000 in the week ended July 10th. And meanwhile, the Republican senators have questioned the Fed chair, Jerome Powell's dovish economic outlook on the second day of the hearing in the Senate Banking Committee meeting on Thursday. And Powell reiterated that inflation would gradually wane after monetary stimuli are rolled back. However, a fresh spike in the COVID-19 cases appeared to have dampened the investors' spirits as they feared the economy might take a hit if the situation does not improve. 9 of the 11 critical segments of the S&P 500 remained in the red zone. And let us now look at the newsmakers. Energy and technology stocks were the bottom losers, while the utility stocks were the top gainers. The New York-based Morgan Stanley Bank's second quarter profits surged 10% to $3.51 billion on revenue of $14.76 billion, and the stock was trading almost flat at 0.26% on Thursday. Taiwan Semiconductor Manufacturing Company Limited's earnings rose by 18% year over year for the quarter, beating analysts' expectations, while sales increased by 28% to $13.29 billion. However, despite the positive earnings report, TSM shares plunged 5.53%. And shares of American International Group Inc. rose 3.05% after it announced to sell around 10% stake worth $2.2 billion in its life insurance business to Blackstone Inc. In the energy stocks, ExxonMobil fell 0.95%, Chevron Corp shed 0.70%, and Royal Dutch Shell lost 2.29%. In the tech space, Apple Inc. fell 0.70%, Microsoft Corp rose 0.45%, and ASML Holdings NV was down 2.22%. Nvidia Corp dropped 4.39%, and Oracle Corp dropped 1.85%. Looking at the crypto stocks, Coinbase Global fell 3.06%, and Bitcoin dropped 3.62%, and Ethereum dropped 3.17%. Let's move on now to the futures and commodities markets. The gold futures were up 0.29%, silver increased 0.62%, and copper rose 1.04%. The Brent oil increased 0.08%, and WTI crude was down 2.27%. Now we'll take a look at how the bond market performed. The US Treasury yields fell to one-week lows on Thursday as Federal Reserve Chairman Jerome Powell testified that the US Central Bank would continue to support the economy. The 30-year Treasury bond yields was down 3.31%, while the 10-year bond yields decreased 4.09%. In the currency space, the US dollar advanced on Thursday, recovering much of the ground lost in the prior session, and the US dollar futures index increased 0.19%. And that was the latest from the US markets. Now it's time for a short break. Please stay tuned. I'll be back soon to take a look at the UK and the Asian stock markets.
Tune in to get the latest information.
Whether it's about market movements or the currency graph.
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐘𝐿 TV.
Good morning, viewers. Thanks for joining us. This is Sage, and you're watching 𝐘𝐿 TV live from Sydney. This is the Global Markets Roundup show. We're just about to take a look at the UK market. Losses on Thursday knocked the European shares 1.2% off all-time highs as a clutch of dismal earnings and falling bond yields dampened sentiments, while the UK listed Avast soared 18% on merger talks. And the Pan-European Stock 600's index slipped 1%, with the oil and gas sector falling 2.7% to a 6-month low. The London markets traded in a red zone after the release of the UK jobs data, and moreover the unemployment rate had increased to 4.8% during May 2021, while it was around 4.7% for April 2021. Furthermore, consumer spending on credit and debit cards in Britain had witnessed a drop of around 4% during June 2021 as compared to May 2021. And looking at the newsmakers now. Cybersecurity firm Avast shares climbed by around 17.62% after the company responded to press speculations and confirmed that it was in discussions with NortonLifeLock for a possible merger deal. 𝐽usteattakeaway.com shares plunged by around 9.31%, although the company had expected to report a profit as new orders rose by more than 50% during the first 6 months of 2021. And the Experian had lifted the full-year expectations after reporting a solid growth of around 31% in top-line revenue during the first quarter. And furthermore, the shares went up by around 3.12%. The FTSE 100 listed Kingfisher shares grew by around 1.13% after it stated that the adjusted pre-tax profit during the first half of financial year 22 would remain significantly ahead of the previous expectations. Eurozone government bond yields fell on Thursday and mainly tracking the US Treasuries as investors continued to assess the dovish commentary from Fed Chairman Jerome Powell. And Powell on Wednesday pledged powerful support to complete the US economic recovery from the coronavirus pandemic and said he was confident price rises were associated with the country's post-pandemic reopening and would fade, sending bond yields falling overnight. And now let us move on to the Asian markets. The Japanese stocks ended lower on Thursday as caution ahead of corporate earnings season and a surge in COVID-19 cases a week before the Tokyo Olympics begins weighed on sentiments. The Nikkei share average dropped 1.2%, with the broader topics sliding about the same margin. Japanese government bond yields fell on Thursday in sympathy with a decline in the US Treasury yields, with the 20-year JGB yield sinking to an almost 7-month low. Sentiment was also helped at the margin by a well-received sale of 3-month T-bills and a smooth liquidity-enhancing auction of JGBs with between 1 and 5 years left to maturity. The benchmark 10-year JGB futures rose 0.04 points with a trading volume of 13,683 lots. China's stocks closed higher on Thursday, with banks and the electric vehicles sector leading gains as investors cheered a better than expected retail sales in June, while hoping for continued policy support to an economic recovery. And at the close, the Shanghai Composite Index was up 1.02% and the blue chip CSI 300 index was up 1.35%. Both indexes made the biggest daily gains since June 25th. And China's yuan inched higher against the dollar on Thursday to reflect some weakness in the greenback in the global markets, but gains were capped by slightly weaker than expected second quarter growth data. Prior to market opening, the People's Bank of China set the midpoint rate at a more than 1 week high of 6.464 per dollar, 166 points in percentage or 0.26% firmer than the previous fix. Moving on now, South Korean shares ended up on Thursday on dovish comments from the US Federal Reserve Chairman Jerome Powell, and although concerns over the new coronavirus cases staying near record highs capped the gains, but the won and the benchmark bond yield strengthened. The Kospi ended 21.41 points or 0.66% higher, rebounding from a 0.20% decline on Wednesday. And the won ended 0.61% stronger than its previous close. And well, we just explored the UK and the Asian stock markets performance. It is time for a short break, but after the break, we'll take a look at the Australian stock market. So please stay tuned to 𝐶𝐿𝐼𝐴 TV.
New Zealand is unique, and 𝐶𝐿𝐼𝐴 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐶𝐿𝐼𝐴 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐶𝐿𝐼𝐴.co.nz.
Welcome back, Sage here. Viewers, I hope you're enjoying your morning so far. You are watching 𝐶𝐿𝐼𝐴 TV live from the Sydney studios, and this is the Global Markets Roundup show. On the last day of the week, the ASX stocks could be under the stress. The major Australian cities such as Sydney and Melbourne battle the COVID-19 outbreak. However, stronger copper and gold prices are expected to help the local miners. And in the Forex market, the Australian dollar struggled to keep up the momentum and closed having failed to get any support from another set of upbeat jobs figures. The Kiwi dollar aimed to extend its rally on Thursday, and the market participants bet on a real chance that local interest rates could increase as soon as August 2021, way ahead of any other developed nation. The Nasdaq ended lower on Thursday and dragged down by the heavyweights such as Amazon, Apple and other big tech companies as a downtick in the weekly jobless claims data spiked investor concerns regarding a recent inflation surge. And also the recent tech rout triggered by Apple's entry into the BNPL space has negatively impacted investors' sentiments. As a result, Australian shares such as Afterpay, BrainChip Holdings and Xero could continue to face selling pressure. On Thursday, the oil prices dropped by more than $1 per barrel on expectations of more supply to hit the market after a compromise deal between OPEC Plus member countries. And Australian energy stocks such as Viva Energy Group, Santos and Woodside Petroleum could trade with a negative bias for the day. Gold surged to a one-month high on Thursday on the backdrop of the US Fed's Jerome Powell's dovish comments and some concerns regarding a deceleration in the global economic recovery. The gold miners such as Northern Star Resources, De Grey Mining and Silver Lake Resources could be looked upon to play the gold theme today. On Thursday, the ferrous futures in China traded higher, with the Dalian iron ore extending gains into a fourth consecutive session, as China's faltering economic recovery underpinned hopes for additional support measured from the government. The most actively traded iron ore futures contract on the Dalian Commodity Exchange closed daytime trading 1.6% up. Lower than expected growth from top consumer China increased expectations for more policy support for the world's second largest economy, resulting in higher copper prices. And the benchmark 3-month copper on the London Metal Exchange was 1.2% higher on Thursday. Local miners such as Fortescue Metals Group, Rio Tinto and BHP Group should be on investors' radar Friday. And thanks for joining us, viewers. That's all for now. Stay tuned with 𝐶𝐿𝐼𝐴 TV for more of the live market updates, and we'll be back with more news on the markets, economies and diverse themes and sectors. Sage signing off.